Hiring a financial advisor should be pretty straightforward. Unfortunately, it's not. I often say to people, the financial advice industry as a whole is a very low barrier to entry, basically meaning anybody can do it. And so you have to be very picky and have a selection process of how you choose a financial advisor. We always talk about a fiduciary, make sure the advisor is always working your best interest. Fee only, the advisor should never be getting paid by anyone but the client. But for high net worth families, it just gets a little bit more complicated, because when you have very high net worth, you don't just need a financial advisor. I'd say about 90% of financial advisory firms, they just manage assets. And that's what the customer or the client thinks that they should be doing. But actually there's a lot more a financial advisor should be bringing to the table to add value to justify the fees that they charge. If you think about estate planning, there's the attorney side of it who draws up the documents, but a financial advisor should be a part of that process to help the attorney understand what the goals and aspirations are of the family. You think about tax planning. A tax preparer prepares tax documents, and they can do some planning, but most of the common comments we get about tax planners is they just do the return, they don't ask any questions. Well, it's really the planner's role in a high net worth family is to understand the complexities of their tax situation and be able to portray that to the tax preparer who's doing the tax planning. You also have insurance. So a lot of financial advisors love to sell insurance because they get paid a commission, but a high net worth advisor should be understanding what value insurance plays in a family and the tool it can be used for to solve tax issues, to solve replacement of income issues, but they should never be getting paid to sell it. That creates a conflict of interest. So understand it, but not necessarily be selling life insurance. You also think about investment management. So high net worth families typically are not just investing in stocks and bonds. They typically are involved in private equity or private deals or their own business, growing and expanding their own industry. So ultimately, a high net worth advisor should be focused on all of those things in a plan and not be getting paid by any of those. I ran into a situation recently where an advisor here in our hometown in Marietta is basically working for a 1% advisory fee, which is pretty standard, but then also offers his own funds, which charges another 1%. And then on top of that has a private fund where he collects 2% fee and then 20% of the profits. So there's a huge conflict of interest, yet the firm touts themselves as catering only to high net worth families. Really, that's too much of a conflict of interest in my mind. I think high net worth families, you do need to focus on the fee schedule, but high net worth families should be paying a flat fee to a financial advisor, not a variable assets under management fee. The flat fee concept at high net worth families allows the advisor to give unbiased advice, to not be conflicted. We had a situation a few years ago where we recommended a family withdraw a large sum of money to buy a beach house because I felt like the beach house option was going to generate more income for the family and give them more diversification from a stock and bond portfolio. It's hard to make that recommendation if you're reducing your income at the same time. So you need to be able to find a firm that is conflict free. We've done that here at Wiser Wealth. So obviously give us a call, give us a chance to earn your business. Thanks for watching.